Silver just exploded past $110 per ounce for the first time in human history. And if you think you've missed the move, Bank of America says we're just getting started with a target of $309. What's happening right now in the silver market is unprecedented, and the reasons behind this rally will shock you. Smash the like button, comment your thoughts, and subscribe for more silver content. The silver market woke up on Monday, January 26th, 2026, with a move that left Wall Street analysts scrambling. US spot silver surged 5.9% in a single trading session, catapulting the price to $109.10 per ounce. By Tuesday, the rally intensified even further, with silver climbing another 6% to trade above $110 per ounce. This isn't just another routine price increase. This is silver writing history in real time, extending its already legendary 2025 performance, where the metal skyrocketed 150%, completely outflanking gold's impressive surge. So what's driving this unprecedented explosion? According to Claudio Wiewel, FX strategist at J. Safra Saracen Sustainable Asset Management, silver's central role in manufacturing chips and batteries has placed the metal at the intersection of two massive global trends: the artificial intelligence boom and the electric vehicle revolution. The US Department of the Interior recently designated silver as a critical mineral, a move that sent shockwaves through commodity markets. When governments start treating a commodity as critical, supply chains become militarized and prices tend to move in one direction, up. President Donald Trump's aggressive tariff threats have placed supply-side risks firmly in focus. Trump recently threatened to raise tariffs on South Korean goods from 15% to 25%. He's also threatened Canada with 100% tariffs if it finalizes a trade deal with China. These aren't idle threats. They're reshaping global trade flows and forcing investors to seek safety in hard assets. The upcoming Federal Reserve policy decision adds another layer of complexity. Speculation that Trump may announce a new Fed chair this week has created unprecedented uncertainty. The so-called debasement trade is accelerating. Investors are fleeing sovereign bonds and currencies, rotating into real assets like silver and gold amid growing unease over heavy fiscal spending in major economies. Comment below what you think silver will hit by the end of 2026. Will we see $200? $300? Let me know your predictions. The physical silver market tells an even more compelling story. Rising prices haven't dampened demand. Chinese consumers are increasingly turning to 1 kilogram silver bars, with manufacturers reportedly shifting production away from silver jewelry toward investment products to meet this surge in demand. Higher prices are actually validating silver's investment thesis, pulling in more retail buyers who see the rally as confirmation rather than a warning sign to sell. This kind of positive feedback loop can drive prices far beyond what traditional models suggest. Now let's talk about how high silver can actually go. Bank of America's Michael Widmer has stated that silver could rise to between $135 and $309 per ounce in 2026. The upper end of that forecast represents nearly triple the current price. These aren't fringe analysts making outlandish predictions. This is Bank of America putting their reputation behind price targets that would have seemed insane just months ago. When mainstream banks start talking about $300 silver, it's worth paying attention. The Silver Institute reported the fifth consecutive year of a structural market deficit in November 2025, with demand continuing to exceed supplies. This is a structural problem years in the making, driven by underinvestment in mining, growing industrial demand, and surging investment flows. Exchange-traded funds have played a crucial role. Since October 2025, there have been 491 tons of net inflows, bringing total holdings to 26,263 tons. The price sensitivity to these ETF flows is measured at 13.6%, which explains roughly 65% of silver's 130% increase since early October. Nick Puckrin, investment analyst and co-founder of Coin Bureau, said both silver and gold have entered uncharted territory. He pointed to the artificial intelligence boom as a key driver, noting that retail FOMO is likely kicking in as investors who missed the earlier rally pile into the market. The AI connection deserves special attention. Silver's high conductivity makes it irreplaceable in semiconductor manufacturing. As the AI revolution accelerates with companies racing to build more powerful chips and data centers, silver demand from this sector is exploding. Smash that like button if you're bullish on silver and drop a comment with your price targets for 2026. The gold to silver ratio provides another lens for understanding silver's potential. It's currently around 50. If gold were to reach $10,000 per ounce, which JP Morgan's Jamie Dimon has suggested is possible, and the ratio remained at 50-1, silver would trade at $200 per ounce. During periods of extreme monetary stress, that ratio can compress dramatically. In 1980, it briefly hit 15-1. If we saw similar compression with gold at $10,000, silver would trade at $666 per ounce. The geopolitical backdrop continues to deteriorate. Ongoing tensions in the Middle East, Russia-Ukraine conflict, Trump's aggressive trade policies, and concerns about Federal Reserve independence are all undermining confidence worldwide. Each of these factors independently would support higher precious metals prices. Combined, they create a perfect storm. The London market dynamics deserve attention. Physical outflows from London vaults throughout 2025 signal that buyers want metal in hand, not paper promises. When trust erodes to this degree, premiums for physical metal can explode far above spot prices. Central banks continue to accumulate gold at historic rates, averaging 585 tons per quarter in 2026, according to JP Morgan. While central banks don't typically buy silver, this gold accumulation signals deep concerns about fiat currency stability. The US dollar's decline adds fuel to the precious metals fire. Its value against other currencies plunged about 11% over the first half of 2025, the biggest decline in more than 50 years. When the world's reserve currency loses value at the fastest pace in half a century, investors scramble for alternatives. Looking ahead, several catalysts could drive silver even higher. Lower interest rates reduce the opportunity cost of holding non-yielding assets like silver. The Trump administration's infrastructure plans could significantly boost industrial silver demand through solar panel manufacturing, 5G network build-out, and electric vehicle production. The wild card is China. If China's middle class continues embracing silver as a savings vehicle the way they've historically embraced gold, the demand implications are staggering. We're talking about potentially hundreds of millions of savers allocating even a small percentage of their wealth into silver. Mike Maloney, founder of goldsilver.com, stated he's expecting silver to easily top $200 per ounce. Keith Neumeyer, CEO of First Majestic Silver, has argued that you need triple-digit silver just to motivate mining companies to start investing again. The mining industry's underinvestment creates a long-term supply constraint that can't be quickly resolved. Even if silver prices reach $300 per ounce tomorrow, it would take years to bring new production online. The inflation-adjusted perspective adds another dimension. The 1980 high of $49.45 would adjust to approximately $200 in today's dollars. This means that even at current prices above $110, silver remains well below its inflation-adjusted peak. Gold has long since exceeded its inflation-adjusted 1980 high. At over $5,000 per ounce, gold was more than 5.59 times its 1980 peak. Silver was only about twice its peak. If silver were to match gold's performance, we'd be looking at prices well above $250 per ounce. The technical picture shows a parabolic rally with minimal pullbacks. Parabolic rallies can take prices to illogical levels that defy analysis. This is both the promise and the peril of silver right now. History provides caution. In 2011, silver reached $49.82 before declining to $11.74 by 2020. But every price decline since that 2020 low has been a buying opportunity. The trend has completely reversed. Smash the like button, comment your price predictions for silver in 2026, and subscribe for more silver content. The retail FOMO is already appearing. Google search interest, online dealer traffic, and social media discussion are all spiking. When retail investors who sat on the sidelines start piling in, they bring fresh capital that can drive prices to extraordinary levels. The institutional involvement distinguishes this rally from previous moves. Bank of America, JP Morgan, and other major financial institutions are publishing bullish research and raising price targets. When the smart money validates a move, it often has further to run. The supply chain for physical silver is showing strain. Retail dealers report longer delivery times. Premiums over spot prices have widened significantly. Some products are completely sold out. These are classic signs of a physical shortage developing. The bottom line, silver has broken out to all-time highs above $110 per ounce, extending one of the most powerful rallies in commodity market history. The fundamentals supporting higher prices remain firmly in place. Bank of America's forecast of $309 isn't a fringe prediction anymore. It's becoming the consensus view among analysts who've studied the supply-demand dynamics. The silver bull market is not over. Multiple catalysts remain in play. The trend is unmistakably higher. Don't forget to smash that like button, comment your thoughts on where silver is headed, and subscribe for more silver market coverage. This is history being made in real time.